Most businesses don't fail because they lack opportunity. They fail because access to capital is still painfully inefficient. Today's guest is trying to modernize commercial finance using AI, live financial data, and automation to replace an industry that's still heavily dependent on PDFs, spreadsheets, and I wouldn't even be surprised with fax machines. Steve Iskander is the founder of Intrepid Finance. And today we're talking about the future of lending, financial intelligence, AI adoption, and what it takes to rebuild trust in a traditionally slow moving train. Welcome to the Iron Podcast, where we sit down with innovative leaders building the future of business. Today, I'm joined by Steve, and I'm really thrilled to have you on the show, man.
Yeah, absolutely. I appreciate you having me on.
Hey, my pleasure. Hey, there's only one you in the world. Tell us about yourself and what led you into this space.
Uh, Great question. I've spent most of my career inside the messy middle of the small business finance arena, the part where founders are pouring everything they have into their business, building something real, continuing to get it to scale, and then instantaneously they hit the wall of not having enough access to growth capital to continue to keep growing. And having lived that from a financer side and as a business owner, being the operator on trying to get things funded and watching how the lending side continually tells businesses that are scaling no, it started to make sense. So what really led me to this was the conviction that the process itself was broken, that someone acted something that would actually stand out in the industry and say, hey, there is a problem here, and it's really a lack of speed that's preventing growing companies from scaling.
Gotcha. You also mentioned that, it's also cumbersome from just the number of levers that you have to pull to make a transaction happen. So what point did you realize technology itself could become the real opportunity here?
It's the hunting and pecking. Often business owners are found searching or hunting and pecking, looking for growth capital. They go around town, they fill out multiple documents, multiple application forms, emailing their bank statements and proprietary information all over these different inboxes, not knowing where it's at. And that's where we're using modern technology and modern infrastructure allows us to be able to pull in that information instantaneously, that there has to be a way. I think of it as that we stuck a man on the moon almost 65, 70 years ago. There has to be a way for us to be able to underwrite and ingest information much easier and faster.
So walk me through, 'cause I love that because I've been in one portion of that business for a lot of years. Walk me through what actually happens when a company submits their application using Intrepid versus the way it used to work.
Yeah, so much of the industry is still antiquated today. Applying for a business loan is tedious, and it's filling out that application multiple places. And again, those data rooms, as I said. Intrepid Finance is an AI powered financial intelligence platform for the commercial lenders, brokers, and private credit funds that we serve. So we've replaced the PDF and the static form fill, the spreadsheet underwriting, the manual calculations of credit spreads, banking, accounting, and AR, so that we can represent the entire picture. We use AI in our technology to integrate with over 20,000 financial institutions, the top 16 ERP systems, so that it can instantaneously pull in that data, calculate the ratio and the spreads so that business owners can do what they do best, and that's scaling their organization and providing a directional decision for a credit manager instantaneously.
All right. So give me an idea of what a business owner would experience doing it through Intrepid versus something else. What's the time differential look like? What are the number of steps? Take me through that process, right? It all starts with a credit application. Go.
Yeah, it's so simple to fill out credit application, standard application, the entire application, including signing off on all the T's and C's and the security requirements on it, takes around 90 seconds to complete. A business owner can upload their documents, financial statements, tax returns, cap table, operating agreements, bank statements directly into the platform, or they can instantaneously connect to the 20,000 institutions that our technology will pull from a view-only access, the bank statements, and the accounting information. Instantaneously, our system automatically looks at the cash flow, the durability, it calculates the ratios, giving a credit manager or an institution a directional decision on the file in 93 seconds. Today, typically that process takes somewhere between 3 and 6 weeks, 6 different systems, and typically 8 different people touching the file before it ever meets a credit manager's desk. That leaves a business owner continuing to wonder if they are going to get this loan or not, continuing to shop the loan around town, and it's costing them that opportunity cost of going out trying to get that capital as well. So today, a typical process is filling out an application, a PDF form on one of these bank websites, emailing documentation. Typically, it's 40 email exchanges back and forth to get the right documentation and to come to a credit decision. With our instantaneously technology, everything is done instantaneously, and all of that information's aggregated and communication directly in our platform.
Wow, that's mind blowing. You had me at 20 seconds for a credit application and 93 seconds for basically a decision, an internal decision that has to get reviewed by somebody, right?
Yeah, so it's not just systematically, it's instantaneous. The instantaneous is a directional decision for a credit manager. Much of what the underwriting process and the time delay is document collection and the calculation of the credit spreads and analysis of the financials. What ours is doing that instantaneously by specific lender to their own unique criteria of that specific lender to tell them a directional decision and about a 98% accuracy that they would take that deal. So that entire underwriting process, typically 6 to 8 hours that they're spending, and that 3 to 8 weeks and 40 emails is condensed down to that 93 seconds.
Okay, so what happens after that to get to a final decision and then, cash in the bank or paying off a vendor or, we'll talk about the different types of products that you have to offer as well.
Yeah, so each different product is a little bit different. What we're trying to do is get the founder access to their growth capital instantaneously and quickly. Typical process is that they're going to get a directional decision within about 24 to 48 hours from a lender, regardless of the entity size. And I think that's one of the things that's very unique about our organization. It's industry agnostic and size agnostic. So you can apply for a $5,000 loan or a $50,000 loan and literally have an approval within the same week that you did your application.
Okay. So, where are there opportunities to include more AI technology to get from that 93 seconds where all the data is collected to getting the decision to to the end customer?
The question is there AI use in
No,
there?
no. Is there more opportunity? Because I mean, listen, let's tell you guys are killing it in the first 120 seconds, right? But then we still got, what did you say, 3 to 4 days to get cash in the bank. Where do you see efficiencies coming to close that gap on the backside?
Yeah, a lot of once we pass the file, once the file's passed off to the lender, it's a lot of their own time restrictions at that point. We've done the heavy lift for those guys. We've built the entire package and built their credit portfolio exactly to their guidelines. The next step is the document collection for the true term documents, the true documents that we're building that into it on. Can our technology instantaneously create those AI documents and be able to send them to the client as a preconditioned approval instantaneously?
So you're also white labeling a lot of times, so a broker or lender can really use Intrepid on their own site, and their clients never know that really it's Intrepid in the background. Are you kind of like a super broker yourselves?
Yeah, so it could be looked at as a super broker, but we're not a super broker. Intrepid is the financial intelligence structure behind it. So we private label to over 200 brokers nationwide that are operating under their own company name, the applications under their own unique branding, their own services that they provide. Our technology is gathering that information in a compliant way, gathering the documents, doing the financial underwriting and intelligence for them, and then providing them a curated, I say, list of direct API and connections with over 200 partnering lenders from SBA all the way down to private credit and including credit cards. They can do again industry agnostic anywhere any size funding in the United States. And what it does is allows a broker to instantaneously understand which lender is the most likely to take this deal written on a cash analysis of the company and submit that document instantaneously to them. What it prevents a broker from doing is continuing to go through their Rolodex like they typically do, or sending a client to the I know a guy, or flipping through their Excel spreadsheet. Our technology and the financial intelligence side of it's instantaneously saying this is the exact lender that would be most likely to write this deal based on all of the information. and it's submitting it. So instead of multiple applications across multiple lenders and the multiple data rooms, you have one application that works across hundreds of lenders, a single data room.
So you're taking a lot of the guesswork out of it for the broker. You're saving the end user, the borrower, a lot of time on the front side. You're taking the guesswork out from the broker, so they don't have to shotgun that credit file around to a bunch of different finance and a bunch of different actual lenders. So that it seems like you're doing a big service there. Where as AI becomes more embedded into underwriting, where do industries need to be careful? What have you learned personally from building Intrepid that surprised you the most?
Surprised me the most. It's every day I feel like there's a new curveball and surprise. From an AI perspective, a lot of it's going to be the information security standpoint, especially for us. For us, we voluntarily went out and did SOC 2 audit. We did ISO 27001 and ISO 47001, which are the global AI standards of ethics and compliance for AI audits. There's a lot of new systems that are implementing out there that are coming out that might be skins on some of the other LLMs that are out there. But the information, the security behind those, not knowing truly who the man is behind the curtain, probably is the most risk and threat to these organizations is that they're uploading their information into a system either as their business owner themselves or they don't understand that the broker might be using it with an OpenAI or a ChatGPT that might not be secure and sharing their information with another third party. With Intrepid, it's all encapsulated in one single system.
Well, that's nice to know. What are you most excited about where Intrepid is heading over, the next 1 to 2 years? What kind of innovation are you working on and what's it going to mean to the company?
Yeah, so for us, one of the things that I'm most excited about is the complete capital stack, as we call it. It'll allow any size organization at any age, so from a new startup to a senior publicly held organization, see instantaneously where they are right now and who are the providers that would provide them every form of capital. I envision a day, and that's what we're working on today, that a founder can use a single application and see what equity options they have, what venture capital options they have, including angel, SBA, institutional banks, private credit, all the way down into, a little bit more into the predatory side. They can see every form of capital, including can they decide do they want North American money or global money? Because what I say is, despite every business being unique and every funder having their own unique criteria, there is a match in North America or globally. And that's what we're doing is providing or democratizing capital globally. So it no longer matters who do you know or where you're at or where you're located in a country. The application works globally and can provide and will find the provider that's most likely to fund your business instantaneously globally. That's how I think you move the world forward. That's how you move e-commerce and business and continued economic development is by opening up access to cash.
That's exciting. It sounds like you're the Match.com of commercial lending. I mean, I love that.
It's a bit, yeah, a little bit more than just the match of it. It's trying to really say this is a solid fit for them.
Well, yeah,
One of the things, Joe, that we find is in that speed standpoint, especially as we talk about more predatory loans that get talked about in the news a little bit more, is that often business owners are found to get into those loans not because the business is unhealthy, it's because it's the only option that they knew.
right. And it's the only option that they knew that they could get that quickly. Because it
Yes.
doesn't mean you're unhealthy. It just may mean that you need something right now because you have an opportunity to seize. You have a bump in the road that's not necessarily a lack of health. It's just something that happened and you need to address it quickly. And that's when people get, I mean, anytime you're forced to make a fast decision, it's when people make bad decisions.
And it is, and now you've injected or you've infested that organization, and depending on how it might grow or shroom inside of the organization, as a banking institution, it's a modern institutional bank because of the antiquatedness of the industry in general. They're forever forbidding that client from ever going back to the bank because they say may have gotten an MCA or a predatory loan. They can never bridge back into an SBA loan or into an institution. And it's almost self sabotage because the institution didn't move fast enough. The founder got maybe a predatory loan down the street, but that they can never get out of that and go back to the institution. So it really started with the institution, had nothing to do with the health of the organization.
Yeah, that's really great insight there. Just curious, so what do you think separates, fintech? Let's scratch that question for a second. Who are who are your customers as far as Intrepid is concerned, and how are you helping that? Like, who's your actual customer, and then how are you integrating with the finance companies? In other words, where do you stand in the ecosystem?
Yeah, so we sell the three different arenas: private credit, so family offices, private credit funds, including factoring or any family office side of it; institutional lenders, so think of this as your depository banks, the Chase banks, the BMO banks. We are essentially the apply now button for an institutional bank. And the third is the private label on the broker side. So regardless of where the deal comes in at, it's the financial intelligence. So the broker uses our technology to match with lenders. The private credit is using our technology to get deal flow, but to also screen and underwrite their own deals, as well as the institution doing the same.
So, okay, now I'm surprised by the fact that, banks are using your technology because I am very aware. I'm not surprised that you're able to pull it off with regards to what is it, TPRM and all that good stuff, right? You've applied to those quite a few times, right? Third party risk
So, yep.
management and vendor risk management. But I guess the part that I'm surprised is that they will use your technology and it speeds things up so much for them. Banks a lot of times equate anything with speed as being, I don't know, less than judicial or less than, less than prudent. So how do you work with the banks when you're doing everything so fast?
It is. We've been fortunate that we've grown a lot through product led growth. Oftentimes, our deals are coming in from the brokers and then going to private credit and going into the institutions. And once they see the capabilities of the technology of the inflow, then they naturally start to buy. So instead of us pitching the product to our institutions, it's typically product led growth. They're getting deal flow in from our technology and our partners, and then they're starting to see it, and they're purchasing the software at that point.
All right. So what are you wanting more of in 2026 and beyond?
More of from an Intrepid standpoint,
Yeah.
it's continuing the democratization of capital, understanding coming from a theory of abundance or a place of abundance, because it's really what it is. It's about getting the right deal on the right desk at the right time. And often everybody holds it. It feels like in the industry, this is my deal. I don't want anybody to know about my deal. What we're saying is that we want to get that right deal, that B plus deal that you would have taken as an institution. We don't want you to take. We want to give that to a provider that's an A plus deal for, of which we can supplement that B plus deal and give you an A plus deal that fits your product, your portfolio perfectly.
All right. So if you could wave a magic wand in your business that would, smooth out some of the things that are either causing friction or that you want just to go faster or better, what would you
What would I fix? The scarcity or the doomsday probably around AI is one of the things. I think there's a lot of bad public PR out there, a lot of bad press on the doomsday, the AI, it's going to take over the world. It's going to wipe everybody's jobs. But really understanding what those efficiencies mean for an organization and the individuals at the organization, that it's not some scary monster behind the curtain. It's actually a tool that they can use just like they use their TI-85 or a Rolodex, that it's just a modern tool that helps them get their job done more efficiently and effectively.
All right, that's cool. I like that. It reminds me of that little cartoon where there's a king, he's fighting a battle, and there's a little castle in the background, and everybody's like shooting arrows or whatever,
Yeah.
and he's like, I don't have time to see any pesky salesperson. The guy behind him's got the sales guy's got a Gatling gun, right? It's really just a productivity tool that has to be used, in a prudent manner. So let me ask you this: what does separate fintech companies that survive from those that don't? I mean, how are you implementing and how are you growing the business today?
Yeah, so those that survive and those that don't are really, what are they solving? Are they really solving a true pain or a nice to have, especially in, I say, land of AI or the modernness of artificial intelligence. You're quickly seeing those SaaS and technology products that were really just a nice to have and not really a pain reliever side of it. So the organizations, the AI companies that are doing it are doing so, I say, transparently from a security standpoint, a learning standpoint of how they're using the information, not reselling that information. And that's a lot of how they're gaining that traction and the trust, especially in the banking industry.
Sure. All right. Couple lightning round on a couple of things. What's your morning ritual?
Coffee, first thing in the world, first thing, non negotiable, typically followed by a short little run in the morning.
Most underrated business skill?
Most underrated, writing, writing clearly or understanding business finances.
Gotcha. Hardest lesson you've learned as a founder?
Everything takes way longer than you ever think it's going to
Yeah.
take. No matter
Yeah.
what, you build in lots of, they say twice as long. It's like three or four times as long, and you can't stop the waves. You can only learn how to surf.
That's right. That's right. Excellent. Excellent. Well, listen, Steve, this has been a fantastic conversation. To wrap up, what's one thing that you believe commercial finance industry needs to rethink over the next couple of years?
Is commercial finance is the openness on how modern technology can really progress and move a business forward. It's not about replacing jobs. It's about being more efficient in what you're doing and allowing more access to capital. Doing what we've always done isn't going to take us into the next galaxy. The technology and infrastructure and every business is innovating at the fastest that it has ever has. And it's being openness to be able to step in, put your toe in the water, fumble, and try again.
Well, we are definitely in an age of innovation, and commercial finance has been a laggard of innovation over the years. So I really am excited about what Intrepid is doing, and Steve, how you're leading the organization. Where can our listeners follow your work or learn more about your organization?
Yeah, so they can find us on our website, which is intrepidfinance.io, as well as on LinkedIn at intrepidfinance.io, or on our myself directly at steve at intrepidfinance.io.
All right. So thanks so much, Steve. Really appreciate you being on the show. And for anybody that's listening, hey, share this with a friend, like it, love it, follow us if you've enjoyed this episode. And as always, we'll see you next time on the Amble and Iron podcast, where we're talking to the innovators that are driving business into the future.